Hello everyone, this is Blaine Pearson, and this is part 2 of the Building Financial Statements with Excel series. In part 2, we'll review creating, linking, and formatting the balance sheet and cash flow statement. If you have just completed the first video, you'll know that we are working with two clients, Amber and Caleb De Leon. In the first video, we reviewed how to input the data from the financial document that we were given in class to create a data sheet. The goal of this video is to create the balance and cash flow statement. The first step will be to open a new Excel sheet. We'll then name the sheet Balance Sheet. From here, we'll then add the inputs. The first step in the process is to title the Excel Statement of Financial Position. Next, we'll then list the assets. To categorize the assets, the easiest and simplest way is to divide them up between cash and cash equivalents, invested assets, and personal use assets. From here, we'll begin the subcategory cash and cash equivalents. The first asset that we have is the joint checking account. Because we have already linked the cells, we can simply hit equals, type checking account, and select the name manager tag. And we will do this for all of the cash assets. After you've listed all of the cash assets, you'll then move on to the invested assets. You'll then select all the assets that the clients have invested. After you have completed listing all the assets and organizing them in the balance sheet, it should look like this, where you have your assets, cash equivalents, invested assets, personal use assets, and the summation of all of their assets. Should also have their liabilities separated by current liabilities and long-term liabilities, with total liabilities at the bottom. From there, you simply take the assets minus the liabilities to arrive at the final net worth number for their balance sheet. You'll do the same thing for the statement of cash flow. You'll list the inflows, you'll list the outflows, organized by saving, expenses, subcategorized by ordinary living expenses, debt and interest payments, life insurance premiums, taxes, and miscellaneous. From here, you'll analyze the total expenses and the total outflows. Because our clients have a total inflow of $198,200 and they have total outflows of $190,247, they have an unidentified cash surplus. In this particular case, the clients had life insurance proceeds in the year that we are analyzing. So what I've done is I've analyzed their cash inflow without the life insurance proceeds on the left and with the life insurance proceeds on the right. This is why we have a deviation. Now, they will not regularly get the life insurance proceeds, so it's important to analyze their cash inflow when they don't have the one-time inflows.